Okay, the recording has started. Once again, Brian Wilson, Market Structure Edge. The date is April 16th. I'm glad you guys can all join me today. Thrilled that you are here. Obviously, a lot going on in the market here during the last couple of weeks. And as always, I welcome your questions. If you would just keep yourself muted as we're proceeding today. And yeah, uh, Chris, we can go ahead and get started on that right off the bat if you want. Chris had a question. If we could take a look at Netflix, and let me see if anything else has come in. Just Netflix so far. Okay, we'll go ahead and get started with that. Share my screen, which I will sometimes forget to do. And I mean, in terms of Netflix and Chris, I forget. Are they reporting right after the bell or tomorrow? I know they're reporting here soon.
Yeah, they're reporting today. Yeah.
Okay, perfect. I mean, it's exceptionally strong, right? You look at broad market sentiment, you know, hidden tens across the board. Shorts are getting covered. That's a very strong look ahead of earnings. We would say market participants expect good things from Netflix here with earnings. That would be the takeaway. Whether they're positioned correctly or incorrectly, we don't know, but just a very strong setup going into earnings. So that would be my take on that. I'm going to have a little bit more of a general look today because we're obviously just in the middle of just a huge momentum rally at this particular time. 10% gains in the S&P 500 in the last 11 trading days coming into today. The last time we talked was April 1st, I think. So we had just come past this huge move at month end. And by the way, let me share what had happened then. This is one of our modern IR reports, S&P 500 and then the corresponding side with the SPY. But I wanted to show you the energy at quarter end. Part of the reason that we got the lift here in the broad market the last couple of weeks, money just came flooding in all at the same time. So here's what it looks like, and what you're looking at here. Excuse me, this is what we call our patterns look. If a behavior or behaviors is above the zero axis, that shows greater influence. So what was happening at quarter end? Well, everyone was underweight. We came into quarter end and big tech had been under a tremendous amount of pressure. That particular day, S&P 500 was up by more than 2%. The top three sectors were basically 3 out of the 4 weakest sectors for the quarter. So in other words, passive money underweight specifically those sectors and a lot of tech exposure there. They came flooding in. Active money came flooding in. Hedge funds, the risk management strategies came flooding in, and we were off to the races, right? But recognize part of that was quarter end activity that got it started. And I think also the fact that the market is getting just a little bit, let's call it preconditioned when we go into, I think both the Dow and the NASDAQ were in correction territory right around that period, and the S&P 500 was very close to it. So all three basically in correction territory at the same time. We get that money flooding in all of a sudden, and like I said, it was off to the races. But if we look at, and this was a fascinating setup, it took a little while for broad market sentiment or for the market. We were underneath what we call the green line, which is oversold conditions. And whenever we moved below that, well, the market bounces. Why did it take so long for the market to bounce with this particular time. I mean, it took, good week and a half or so. Um, Part of the reason is because big tech had been suffering. Even though broad market sentiment had been moving higher, this was big tech at the same time. So big tech had been moving lower into that month end time frame. And this was right about the time, this was actually right ahead of the ceasefire announcement. And I remember, the big discussion in the market. And I had mentioned that particular day, hey, I'm going long. And I didn't go a ton of money, but I went like a quarter position. Why was that? Because big tech actually started to move higher. It started to move higher the same time as the broad market, giving us a signal that both of them were in alignment at the same time. Currently, we're coming into options expirations, and we're firing on all cylinders. You can see this clearly with our momentum portfolio, just as an example. 30 names in momentum right now. That average going back over the last 3 years is about 12 names, just to give you an idea of the type of momentum market that we are in at this particular time. So firing on all cylinders, momentum into expirations. I did mention a couple of risk factors in my note this morning. I'm going to briefly go through those, and it'll give you an idea of what we might see here going forward. I'll start off with SPY. As you're aware, SPY tends to stay at neutral most of the time. It's just the condition of the market in terms of market participants both seeking out growth and value. I want to take you back to 3 different time frames where it went above neutral, and then show you what was happening right around that period. I'll take you back to last April and May. That was obviously when we had the huge market rally, and share with you what was going on there. Market was obviously in rally mode, and get this correct here. So this was SPY back at that time. And what I wanted to share with you is, and it's the image I shared in today's note, that even when SPY moves above 10, and this was obviously a huge rally in the market, look at a little bit of a leveling off for a period. So you have a leveling off, market went higher. Look at this leveling off, market went higher, leveling off. And this one, the market went a little bit higher. But it's that principle that when SPY gets too like supercharged, it does have a period where it does level off then for a little while. Let me show you one other example. This was then in July of that month. So a little bit later, same principle. SPY moves above neutral, market levels off for a period, and then we move higher. So that was one of the risk factors that I mentioned this morning, is probably a little bit of a leveling off here is what I would expect. One of the other risk factors is the fact that big tech has now moved above 8. Broad market sentiment above 6. That has moved above our overweight, or the whole market's getting a little bit stretched. If we look at big tech, it doesn't get above 8 very often, and I'll share with you a spreadsheet that I've put together. But as you can see, we're right at 8 right now. And if we look at big tech when it does move above 8, and this goes back to the beginning of 2024, when it has that period moving above 8, it actually tends to come under a little bit of pressure. You can see every single time frame there except for one. This was right after the tariff tantrum. Big tech came under pressure there for the next few, or not big tech, but the whole market came under pressure. We don't tend to stay, big tech doesn't tend to stay supercharged for very long. It's only usually above 8 for about 4 days at a period. Market doesn't tend to implode though. You have a period almost like what I showed you with SPY where the market cools off. You can see that over the next few weeks or during that time frame, about a week or so. But then the week afterwards, the market starts to recover again. So that's kind of that look for big tech going above 8. I'll take you behind the scenes here for one moment. Every once in a while, you'll have it where it's just supercharged. And this is a spreadsheet that I keep looking, and I have a number of things, but this is big tech, and I just wanted to highlight this for you guys. This was a supercharged period that lasted, the better part of about 3 weeks, as you can see. Big tech was just exceedingly strong. It briefly dipped below 8, but it never went very far below it. And then it, immediately went higher again. And on the spreadsheet that I'd showed you, that's this one right here. So we had 2 different periods here, and it was just a very, very strong period for the market. That's part of our, I think, look ahead. We are at this potential inflection point here at expirations. I would expect a general calming here for a little while. And then the question is, do we get supercharged returns, after that? The nearest comparison I can point you to would be going back to last April. That was obviously an extreme outlier in the market. This was what last April looked like. This was market structure sentiment moving above that red line. That's basically stretched or overbought conditions. For those that are familiar with Edge, when we move above that red line, market gains tend to just flatten out. Over the next couple of weeks, the market tends to gain about 50 basis points. You can see that right through here. Market flattens out, and then what's next? Market flattens out, what's next? Market flattens out, what's next? This was the extreme outlier. And I think as we just consider market conditions, we'll have to see whether big tech remains strong like it did back in May of that year, and obviously drove huge gains. Let me see if there's any questions that came in that I've missed so far. Candace, what do you mean by API access? Candace just had a question about, and she's typing right now, but. And I'll have to check in with Tim. But let me go ahead and continue with the discussion, and then I'll circle back to that as Candace and Brad are typing in notes. I think that's most of what I wanted to actually cover today, guys. Just in general principles, watching what happens with big tech going forward. Yeah, Candace, in terms of Candace's question, was API able to get the Edge info for auto download for spreadsheets? Some of those things are items that that we are working on, but budget permitting. There's some of them obviously that you do have access to. If we look at the momentum names, you can download those into Excel and what have you. Some of the other things, we will be working on over time. Brad is asking about some of the energy stocks right now. How do they look? Let's go ahead and take a look at that. And one item to note with expirations I was going to say as a norm. We tend to see a lot of movement in the energy names right around expirations. They'll move one way going into expirations. A lot of times they'll change afterwards. There's other sectors, but over time, I've watched energy a lot, and it does tend to expirations tends to be an inflection point where strategies can change. If we look at energy in general, just starting to firm up a little bit. For now, it's bottomed at 4.4 up to 4.5. You can see short volume moving the other way. The bigger guys trying to firm up. And what this is I keep a list of the top companies in a particular sector. I do that for almost all the sectors. Sometimes that gives me an idea if the big guys can sometimes move first. Brad, I would say possible inflection point. Sometimes conditions can be not great at expirations, and then they can change afterwards. This could be one where it changes afterwards. Just a general principle coming into the next couple of days. This is just what I do. If I'm looking at the daily trading ideas and I'm thinking about trading from a particular name, maybe I wanted to look at AAOI. As a general principle, and once again, this is just me, I will tend not to hold those from Friday into Monday. Why is that? Well, we've come to the conclusion of one expiration cycle, and the focus is then shifting to the next expiration cycle. And I don't know for sure whether AAOI, whether that's going to have the same leverage and same strategies that have been employed during this expiration cycle as it will be in May. So once again, personal preference, but I'll usually hold off on trading individual names over the weekend going into, let's call it a new cycle. Just to recap from a big picture perspective, I would expect a general cooling down here. That cooling down period could last a week or so. It could last a little bit longer. On average, when we move above the red line, we're above that red line for about 2 weeks. That's the long-term average. And once again, market gains during that period. Let me take you back on a 3-year look. Market gains during that period are about 50 basis points. So, where you hit that red line with regularity, and this will be interesting here going forward as well. We've obviously had just a period of general weakness. It's why Tim and I were not as enthused about the market at the beginning of the year. We just weren't hitting above the red line with regularity, which is the normal rhythms of the market. Those rhythms had changed, and we're just going to have to see whether what happens here moving forward. I would expect a general cooling for a period of time. And then as we saw last May, the market just continued to take off. Part of that was because big tech continued to remain strong. So I'll be watching big tech during the next week or so to see whether that remains strong or not. But that's kind of my general take right now. We are at an inflection point. And here at an inflection point, market strategies can change. Question from Chris: any additional thoughts on SPY hitting 10 today after such a spell at 5? And let's go take a look at that one additional time here. So what Chris is mentioning is just this rocket ship that took SPY up to 10 here. And I would go with what I mentioned earlier when I was showing you a couple of those looks. Sometimes you'll hit 10 even when it was last April and May. You can hit those periods, but you do tend to have that period where it calms down for a little while. So that's my general take. Look for, call it what you will, calming down, consolidation, whatever you might want to call it. And then in general terms, I think the market probably continues to move higher. So that is where I am at with today's take. Can I address any other questions for you today?